President Trump declares, quote, "Bitcoin has become amazing. It's a great thing for our country," unquote. This isn't just a casual remark. It's a profound shift in the highest echelons of power, solidifying a pro-crypto stance that has been evolving within this administration. For years, Bitcoin was often viewed with skepticism, sometimes even outright hostility by political leaders. Yet, in just a few short months, we've witnessed a remarkable transformation in official US policy, culminating in this powerful endorsement from the highest office. This embrace of Bitcoin as a strategic national asset carries immense implications for the global economy, the US market, and the future of digital finance. We'll be dissecting every angle from its impact on investment flows to its role in national security. It's worth remembering that the president's initial views on Bitcoin were far from favorable. In 2021, he infamously referred to Bitcoin as a scam and a disaster waiting to happen. However, his perspective has undeniably evolved, especially throughout his most recent campaign and since his return to the Oval Office. This shift is a testament to the undeniable growth, institutional adoption, and increasing legitimacy of Bitcoin and the broader digital asset space. Since his inauguration earlier this year, the administration has taken decisive steps to position the US as the global leader in digital assets. In March, President Trump signed an executive order establishing a strategic Bitcoin reserve and a US digital asset stockpile. This groundbreaking move treats Bitcoin as a reserve asset akin to gold or other traditional stores of value. The Bitcoin for this reserve is initially sourced from criminal or civil asset forfeiture proceedings, and crucially, the US will not sell Bitcoin deposited into this reserve. Furthermore, the Secretaries of Treasury and Commerce are authorized to explore budget-neutral strategies for acquiring additional Bitcoin, meaning they can find ways to buy more without imposing direct costs on taxpayers. Beyond the reserve, the administration has been active on multiple fronts. Just last week, President Trump signed the Genius Act into law. This historic legislation primarily focuses on stablecoins, creating the first ever federal regulatory system for them. It mandates 100% reserve backing with liquid assets like US dollars or short-term treasuries, requiring monthly public disclosures of reserve compositions, and aims to strengthen the US dollar's global reserve currency status by driving demand for US treasuries. It also includes measures to combat illicit activity, requiring stablecoin issuers to have the technical capability to seize, freeze, or burn stablecoins when legally required. This is a clear signal that the US is serious about integrating digital assets into its financial system in a regulated manner. President Trump's administration has also issued executive orders to support the growth of the US crypto industry, signaling a lighter regulatory touch compared to previous approaches. The SEC, under new leadership, has established a Crypto 2.0 task force tasked with creating clear rules, moving away from a regulation by enforcement era. This includes the reversal of Staff Accounting Bulletin 121 or SAB 121, which previously restricted banks from offering crypto custody services. This shift is designed to encourage innovation and attract more digital asset activity to the US. The appointment of figures like David Sachs as the special advisor for AI and crypto within the National Economic Council and a more crypto-friendly acting chairman at the SEC signals a clear intent to foster a supportive environment for the industry. Now, President Trump's explicit endorsement and tangible policy actions supporting Bitcoin have profound implications for the US market and traditional stocks. When the leader of the free world declares Bitcoin, quote, "amazing," unquote, and establishes a national reserve, it dramatically boosts Bitcoin's legitimacy. This signals to institutional investors, corporations, and even cautious retail investors that Bitcoin is not just a speculative asset, but a recognized and strategically important component of the global financial landscape. This can accelerate the adoption curve, leading to increased investment from pension funds, endowments, and corporate treasuries. Following President Trump's election victory last November, Bitcoin surged from $70,000 to an all-time high of over $109,000 on his inauguration day. While there have been market fluctuations since, this recent explicit endorsement is likely to inject renewed confidence. Increased demand, coupled with Bitcoin's fixed supply of 21 million coins, creates a strong upward price pressure. This positive sentiment can spill over into the broader crypto market, benefiting other major cryptocurrencies like Ethereum, Solana, and Cardano, which the administration has also mentioned in the context of digital asset stockpiles. By actively fostering a favorable regulatory environment and expressing a positive outlook, the US aims to attract significant investment and talent in the blockchain and digital asset space. This could lead to a boom in crypto-related startups, job creation, and technological innovation within the US, potentially making it the undisputed crypto capital of the world as promised. This means more venture capital flowing into blockchain companies, more engineers and developers choosing to build in the US, and a more robust digital infrastructure. The establishment of a strategic Bitcoin reserve highlights Bitcoin's emerging role as a strategic asset for national interests. It's seen as a hedge against inflation, a portfolio diversifier, and a means to potentially circumvent geopolitical risks. For a nation with a substantial national debt, holding a scarce appreciating asset like Bitcoin in reserve could be viewed as a long-term strategy for fiscal health, although this is a controversial concept among traditional economists. The Genius Act, by strengthening stablecoins backed by the US dollar and treasuries, reinforces the dollar's global reserve currency status in the digital age. This is a strategic move to ensure that as the world transitions to digital payments, the US dollar remains central. This contrasts with concerns about central bank digital currencies or CBDCs, which the Trump administration has explicitly prohibited, preferring private sector innovation in stablecoins. This approach generally provides more flexibility and potentially less government overreach compared to a direct CBDC. Companies involved in blockchain development, crypto infrastructure, cybersecurity for digital assets, and AI-driven crypto analytics are likely to see increased investment and growth. This could positively impact tech stocks with exposure to this burgeoning sector. Traditional financial institutions that were previously hesitant to engage with crypto due to regulatory uncertainty are now likely to accelerate their offerings in custody, trading, and asset management for digital assets. This could benefit established banks and brokerage firms that adapt quickly. Now, Trump's support for domestic energy production, including fossil fuels and nuclear energy, aligns with the interests of Bitcoin miners. Lower energy costs in the US could make American mining operation more competitive globally, potentially attracting more hash rate to the US and strengthening the nation's influence over the Bitcoin network. This could be a boon for specific energy companies and regions with abundant, cheap power. Increased mining activity and overall crypto adoption will drive demand for specialized hardware and semiconductors, benefiting companies in these industries. The strong pro-Bitcoin stance from the United States sends a clear message to the international community and will undoubtedly influence global crypto adoption and regulation. While not explicitly stating a Bitcoin standard, the establishment of a strategic Bitcoin reserve by the world's largest economy legitimizes the idea of Bitcoin as a nation-state reserve asset. This could encourage other countries, particularly those seeking to diversify their reserves away from traditional fiat currencies or those facing geopolitical pressures, to explore similar strategies. We've already seen countries like El Salvador adopt Bitcoin as legal tender, and now the US, through its reserve, is implicitly acknowledging its store of value properties. This move could spark a new form of crypto arms race among nations as countries compete to attract talent, develop infrastructure, and potentially accumulate strategic digital asset reserves. This could also lead to greater international cooperation on regulatory standards, as nations seek to create a stable and interoperable global digital financial system. By embracing Bitcoin, the US is projecting an image of forward-thinking leadership in financial innovation. This enhances its soft power and could make it a more attractive destination for global tech companies and entrepreneurs. It underscores a belief that digital assets are not just a technological fad, but a fundamental shift in the architecture of finance. As we discussed in our previous segment, in an increasingly fragmented geopolitical landscape, assets like Bitcoin offer a degree of financial sovereignty as they are less susceptible to traditional financial sanctions or the whims of a single national government. While the US is imposing sanctions on Russian oil, its embrace of a decentralized asset like Bitcoin also highlights a future where nations may seek alternative, more resilient financial rails. The very nature of Bitcoin as a censorship-resistant asset makes it a double-edged sword in the context of international relations. While the outlook appears largely positive for Bitcoin under this administration, it's crucial to acknowledge the challenges and ongoing considerations. Now, Bitcoin remains a volatile asset. While presidential endorsement and institutional adoption can provide tailwinds, the crypto market is still susceptible to sudden price swings due to macroeconomic factors, regulatory uncertainties. Even friendly ones can cause short-term market reactions and market sentiment. The challenge for the administration will be to strike the right balance between fostering innovation and ensuring consumer protection, market integrity, and national security. While the intent is clear, the implementation of comprehensive regulatory frameworks is a complex undertaking that requires ongoing dialogue between policymakers and industry stakeholders. The energy consumption of proof-of-work cryptocurrencies like Bitcoin remains a topic of debate. While the administration supports domestic energy production that could benefit miners, environmental concerns are likely to persist, potentially putting pressure on miners to adopt more sustainable practices or for the network to explore more energy-efficient alternatives in the long term. The very geopolitical tensions that make Bitcoin an attractive strategic asset can also pose risks. Any major global conflict or financial crisis could lead to unpredictable market reactions, including potential sell-offs of all risky assets, even those perceived as hedges. As the crypto ecosystem grows, so too does the potential for cybersecurity threats, fraud, and illicit activities. Robust regulatory frameworks and enforcement mechanisms will be essential to maintain trust and protect investors. President Trump's statement that Bitcoin has become amazing, it's a great thing for our country, is more than just a passing comment. It signifies a profound shift in the US's strategic approach to digital assets. By embracing Bitcoin as a national asset, establishing a strategic reserve, and implementing clearer regulatory frameworks through legislation like the Genius Act, the administration is actively shaping a future where the United States aims to be at the forefront of the global digital economy. This signals a period of increasing legitimacy and potentially greater institutional involvement, which could lead to long-term appreciation for Bitcoin and other major digital assets. However, as always, due diligence and an understanding of market volatility remain crucial. It positions the US to attract significant capital, talent, and innovation in the blockchain space, fostering job creation and economic growth in a rapidly expanding sector. It also attempts to ensure the US dollar's continued dominance in a world increasingly moving towards digital currencies. This move sets a powerful precedent, potentially encouraging other nations to re-evaluate their own stances on digital assets and fostering a more competitive yet potentially more regulated global crypto landscape. The next few years promise to be transformative for the crypto and blockchain industry, with the US now firmly established as a key player driving its evolution. We will continue to track the policy developments, market reactions, and global implications of this monumental shift. That's all for this special report on crypto, AI, and blockchain news. Thank you for joining us.